All right, today we're going to break down a smarter way to get into tech stocks. We're talking about an approach that's less about chasing hype and more about strategy, and it's all centered around an ETF called QQQI.
Let's kick things off with a feeling I bet is pretty familiar. You know you need to be in tech, right? That's where the big growth is. But oh man, those wild swings, they can be totally nerve-wracking. It really feels like you're forced to choose between the fear of missing out and, well, actually getting a good night's sleep.
But what if there's a different way to play this game? That's what we're talking about today. We're going to frame this whole thing as a strategic game. We're picking the right tool. In this case, the right ETF is way more powerful than just trying to bet on which individual stock is going to be the next superstar.
Okay, so let's get right into it. When you start looking at tech ETFs, it is just this alphabet soup of tickers, right? It's easy to get lost. So to really get a handle on the game, we've got to meet the three main players in the Nasdaq 100 universe.
First up, you've got the classic, the original gangster, QQQ. Think of this as pure, uncut exposure to the biggest names in tech. It's for the growth chasers, the people who are ready and willing to handle a very, very bumpy ride to get there.
Okay, then on the other side of the spectrum, you've got QYLD. Now this one is all about one thing, generating high monthly income. We're talking big yields. But, and this is a big but, there's a major trade-off. You give up a ton of that upside growth when the market decides to just take off like a rocket.
And that brings us to the star of our show today, QQQI. This ETF, well, it carves out a third path. It's a smart hybrid, designed to find that strategic sweet spot right between the two extremes of pure pedal-to-the-metal growth and pure defensive income.
So here's a really simple way to think about it. QQQ, that's your raw speed demon, all gas, no brakes. QYLD is the total opposite. It's the defensive bunker, all about protection and income. And QQI, well, that's our disciplined strategist, the one playing that smart middle ground. All right, so what is it that actually makes QQQI the disciplined strategist? How does it work? Well, it all comes down to its secret sauce, a unique filtering process that looks for one specific thing called quality.
But quality can sound a little vague, right? So what does it actually mean? Well, QQQI doesn't just go out and buy every single company in the Nasdaq 100. Nope, it runs a filter. It's specifically looking for the durable, resilient businesses. You know, the ones that are just gushing free cash flow, that don't have a mountain of debt, that have really steady profits, and can handle a punch when the market gets rocky. It's a way to lean away from the purely speculative moonshots. And what you get from that whole quality screening process is a really powerful combo. You're still getting exposure to all that amazing long-term growth potential in tech, but you're also getting a steady stream of income paid out along the journey.
So let's put them head to head. When you look at them side by side, the difference becomes crystal clear. QQQ is the pure growth engine, period. QQI is more of a balanced performer. So yeah, you might give up a little bit of that raw top-end speed, but what you get in exchange is more stability and a much, much healthier dividend yield.
I love this analogy. Think of it like this. QQQ is like a Tesla with the pedal floored. All gas, no brakes. QQI is like a Tesla that has regenerative braking. You're still moving fast, you're still in a high-performance machine, but you have this awesome system that's capturing energy and adding efficiency and control to the ride.
And listen, do not underestimate the power of those dividends. It's not just about the cash in your pocket, it's about psychology. When the market gets choppy and volatile, that income stream acts as a psychological anchor. It's this little bit of positive reinforcement that helps you stay calm and, this is the most important part, stay invested.
Okay, so this all brings us to the million-dollar question, right? Is this disciplined, balanced approach actually the right fit for you and your goals? Because let's be real, there's no such thing as a one-size-fits-all ETF.
So let's break it down. Who should really be looking at QQI? Well, it's perfect for the long-term investor who wants that tech exposure, but maybe with a little less of the crazy volatility. Or maybe for a retiree who doesn't want to completely abandon the growth potential of tech. Now, who is it not for? Probably not the best fit for short-term traders hunting for the fastest possible gains, or for someone who only cares about getting the absolute highest yield like you might from QYLD.
So how does this actually look inside a portfolio? Well, here's a great example. You can think of QQQI as your dedicated growth with discipline part of the pie. It slots in right alongside your core investments, giving you that awesome, quality-focused tech exposure without completely taking over the risk profile of your whole portfolio.
All right, last thing here, and this might be the most important, underrated benefit of an ETF like QQQI. It's not really about the numbers, the yield, or even the quality screen. It's about the behavioral edge it gives you, the investor.
Why is that so important? Because the number one obstacle to your long-term success, it isn't a market crash. It's us. It's our own emotions. It's that all-too-human tendency to panic and hit the sell button at the worst possible moment. And this is where a design like QQQ's really truly shines. Because it's built to give you a smoother ride, it just makes it psychologically easier to stick with the plan. That little income cushion helps keep you grounded during downturns. It helps you stay in the game so you can capture that incredible power of long-term compounding. Because the real win, the real alpha, isn't about timing the market. It's simply about staying in the market.
So I'll leave you with this question to think about. Who really comes out ahead in the long run? Is it the investor who has the quote-unquote perfect strategy but bails on it when things get tough? Or is it the investor who has a good, solid strategy that they can actually stick with through thick and thin? In the end, the best strategy is always the one you don't abandon.